Yep, I'm here.
Okay. Okay, so this is this is us. This is Fordham Road Collaborative. That's the email for both for me and for Dennis. I'm Robert Brancatelli at Fordham Road. This is Dennis Kushner. When you want to get to the website, if you need have a friend or you want to look at the recording, you can get to fordhamroad.net. Fordhamroad.net. And I want to point something out. I hope you can see this. This is the Kushner Report page on the Fordham Road website, and so we post the videos. As I say, we do them actually very soon after the actual morning. But also we've added Dennis appeared last month with Ida Bailey and a CPA firm, and they talked about the art of dental finance and management. So you can listen to that podcast. And I think that's an even more extensive review of regional U.S. and local kinds of economic trends, right, Dennis?
Yes.
Yeah, so you can do that. And with that, I'll just say that this is being recorded. Thanks very much. If you're new to the channel, it's the Kushner Report, and there's Dennis, and he will give us an update on all things economic that relate to us. And if you have any questions, you can either put them in the chat or you can wait until the end of the Dennis's presentation, and we'll open it up for Q&A. And I believe that's it, Dennis. You take it away.
Okay, we're ready. Let's take a look at today's agenda. So what we're going to talk about today is key economic indicators. We'll look at the global economy, the domestic economy, mergers and acquisitions, other significant economic news, and then we'll take a look at what's ahead in 2021. One I wanted to address this time, it will be the oil and gas outlook for 2021, venture capital update, and the semiconductor shortage impact. And as we start to look at the economic indicators, I'm going to cover today, we're going to look at the gross domestic product. We're going to look at inflation, which is a real concern around the country, unemployment at the federal level, unemployment at the California level, and the price per barrel of oil. So let's get started. So first of all, if you see the asterisk next to all these figures, those are the changes that have occurred since our last presentation in April. And for the most part, it's pretty good. If you look at the global GDP, we're now looking at 6.1% for 2021, followed by in 22 dropping down to about 4%. Still, it's good. It's well over the 3% that we normally see. If you look at the United States, they've taken the GDP up again this year to 7%. That's probably one of the highest in record. And again, from where we've been in the past to where we are now, and then it'll drop down to about 5.6 next year. Inflation is around 3.2% and is floating up and down depending upon some things I'll cover a little bit later in the presentation. And then inflation should drop down a little bit next year to 2.3%. The unemployment rate around the country has dropped down to 5.4%, projected to go out the end of the year. And then in next year, we're talking about 4.4%. So it's going to be a while before we drop down to that 3% level that we've seen in prior years. California unemployment is running at 6.8%, and California unemployment next year is projected to go out about 5.1%. Keep in mind that California typically is the last state to go into a recession, and typically we're the last state to come out of the recession. So it's kind of following the norm as we see. You look at the price per barrel of West Texas crude intermediate, the concern we have right now, we pegged the oil prices per barrel to be around $57 to $70 a barrel. And to me, we're close, and I'll get into that as we get further into the presentation. One of the things I wanted to mention, though, is since the pandemic started, about 15 to 20% of the gasoline trucks in the program are sitting idle along some stretch someplace because a lot of the drivers have taken other jobs, a lot of them were laid off. So they're having a problem bringing product to market. So that's one of the reasons you're seeing some issues right now in the United States, along with production, which I'll cover a little bit later in the program. So let's take a look at the global economy. The Eurozone is shrinking for the second quarter in a row. GDP in Europe fell about 0.6 of a point quarter over quarter, but it's a bit less than was expected. This is down from the 1.8% shrinkage that we saw several months ago. In Germany, however, was the far weakest. The report there that GDP declined by 1.7% in the first quarter. And that's been up and down because of the pandemic. And quarterly, we're looking at Italy, which is another key economy. They dropped about 0.4 of a point. Spain dropped about 0.4 of a point. However, the good news is France saw an increase of about 0.4 of a point in the first quarter. So we're starting to see some changes going on. A lot of this will be dictated about what happens in terms of vaccines availability and moving further in the right direction away from the COVID impact. So we see that there's a divergent global recovery persisting. We'll see more of that taking place. Canada's activity was very good. They had a robust economy for the first part of the year. Their GDP was up substantially. And there's also a pause in China where the April numbers in China and also in Mexico fell slightly in the first quarter. If you look at commodity prices, they continue to surge around the globe. And we're now seeing a surge in prices from steel and copper to corn and lumber, commodities that are started. This has been going up since the beginning of the year. And we have not seen these levels in years. The increase really threatens the cost of goods from foods to buildings. And we're seeing that if you go to the markets today, you go to Home Depot and you try to buy lumber, etc., the prices are soaring. And one of the key things here is this could fuel inflation further if we can't get some of this under control. Now, China, which is a critical source of supply and demand for raw materials, is playing a big role in that the government tries to reduce the production of key metals such as steel and aluminum. Food prices, if you notice, is soaring. We've seen prices going up across the board, both here and across the pond. And that's going to continue until we can see people going back to work. And the supply chains and all the different vertical markets have had a major problem as the recovery began to improve. In England right now, they've kind of scaled back the purchasing of some of the products they were using in the economy because now they're feeling it's getting stronger. So they're tightening up things, and you'll see some interest changes coming up in that area. If you look again at the United Kingdom, their GDP rose about 0.2 of a point month over month. So they're starting to see some good traction going forward. On the domestic side, this is incredible news. We saw GDP increase 6.4% in the first quarter of 2021, much higher than everybody expected. And again, we're seeing with widespread vaccinations and more funds coming in from the government, as well as the stimulus package for people and people taking that money and spending it, et cetera. That's been helping us a lot. The key is we're turning the corner in the pandemic, along with vaccine availability. Economists expect more good news in the forthcoming months for the remainder of the year. The real key right now is this is the biggest concern we have: product shortages, bottlenecks, higher prices, especially in sectors such as construction, automobile manufacturing, and other industries that are struggling to meet the demand for materials such as lumber and semiconductors. So this is kind of permeating all throughout our sectors in this country. Next piece I have up there, it's $70 oil, $200 for iron and copper commodities. I mean, we haven't seen these numbers in decades. And there's a real concern here with that price happening right now. So the real key is last week, the West Texas crude 2 days ago was over $66 a barrel. And that means we're getting closer to 70. So hopefully we're going to see relief. Bloomberg basically said that the raw materials as of last week the costs have gone up 21% since January. That's the highest tracking since 2016. And again, if you look at some things like copper, for example, surged at something like $10,000 in a process, if you will. And there's some real concerns in terms of commodities. Now, the Federal Open Market Committee met again last month and basically indicated that they're going to remain unchanged for the future, for the oncoming months ahead. However, they're going to continue to increase their spending in terms of mortgage-backed securities and basic products in the marketplace. So they're going to continue to insert money into the economy at this time. And we don't look for them making any change in interest rates for the time being. However, if inflation continues to worsen to some degree, they'll be able to go back in and they'll start raising interest rates. So we'll see what happens as we get further into the year. Now, the U.S. job openings, this is amazing. They're up right now to 8.1 million jobs are available, and companies are having trouble finding workers. So the 8.1 million job openings right now are higher than they were before the pandemic, which was at one time was at 7.5 million jobs. So this is a good sign. And so we're seeing this moving along here, and we haven't seen this much since November of 2018. And despite the strengthening in growth, the worsening is being placated primarily because of the supply chain situation. So right now we have shortages ranging from microchips to 2x4s and also in chicken wings. So products across the board are backlogged. I tried to buy something the other day at Home Depot, a basic product, and it's on back order for 6 months. And I went online, I even went to Amazon, not available. So there's another example where a lot of products are just not available yet coming to the shelf. So we're going to see this continue throughout the year. The real concern is I spoke to a friend of mine this morning who worked out at the gym, and basically he works for a major car company here, a dealership in San Diego. Normally this time of the year, they have about 300 new vehicles on the lot for sale. They have less than 60 cars available right now. And the concern is sometime in the next month, they'll be out of vehicles to sell, new cars. They'll have to move more towards used cars. And the problem you have now is that used car prices are starting to escalate substantially. In some cases, somewhere between 10, 15 to 20%. So that's what's taking place right now. And this is predicated on the fact that they can't get chips. And I'm going to talk about that a little later this morning. So let's take a look, for example, at the oil industry. So all of you who drive cars that are not electric have to pay gasoline prices. So the industry is used to highs and lows in various economic cycles, but the downturn caused by COVID-19, however, is like any other. So what we're seeing now, petroleum products and requirements are going to be changing as we go forward over the next decade. There's going to be tremendous demand now for shifting away from traditional fuel to more in the area of high-tech products and other things, wind technologies, moving away from our traditional uses of fuel and petroleums. But the pace of the recovery is really coming on strong, stronger than we expected. And so what's happened is we've seen a number of the oil fields are back because they had laid off a lot of people. You saw production levels were down. So what's going to happen with the oil and gas industry? Well, the problem is they've laid off a lot of people. A lot of them were full-time permanent employees, not just seasonal people. And they're trying to get these people back on board. So that's going to be a major problem over the next few months. The concern we have right now is that if you look at what's happening, so as of today, we're producing about 97.7 million barrels of oil a day around the world for 2021. And it's about 5.5 million over what we saw last year. However, that's still not enough because the demand is there. If you look at places like China and Korea, South Korea, and Japan, they have a very big appetite for oil products. So the demand is there and we're not being able to meet the demand. So what's taking place here is the fact that the Energy Administration is forecasting that basically we should see oil production increase in the latter part of the second, third, and fourth quarter this year to meet the demand. Hopefully that will come down and will drive prices of oil down. And so we'll be going in the right direction. But again, everybody is behind because of what's happened. People were furloughed, et cetera. So I think in the long run, we're going to be fine. But again, keep in mind the Middle East, Russia, and other parts of the world, their economies are based upon oil and oil-related products. So we should see that improve going forward. Venture capital, my friend Ooster is on board. This is near and dear to his heart. So the first quarter results came in, and we saw a surge to new quarterly records. So the companies have raised $62 billion in the first quarter. That's up 117% over the prior year, and 62% up in the fourth quarter compared to 2020. So deal activities, you can see there's about 1,735 deals. This is about 14% higher than last year. Now, mega companies, that's you see there 184 mega rounds in 2021 first quarter. This is another new record. And so you're talking about companies raising over $100 million per out in the marketplace. So quarter one, for example, you saw the fourth quarter there, it's 102. So mega rounds were up by $40 billion. So The deal activity stages are up. Now, keep in mind, seed money has not been as robust as they thought it would be for this part of the year. So we're seeing companies looking for initial funding. It's down over what it was a year ago. Now I want to talk a little bit about the implications with the shortages of the automobile production as it relates to semiconductors. And you know, we as a country are very high. We're a market leader in the process and technology of the future of what we're trying to design here. One of the problems we're lagging on right now is the actual fulfillment through manufacturing. So the shortages are very well pronounced. We're seeing now it's being more visible. Several car companies such as Ford, General Motors, Subaru have basically run out of chips, and some of the factories are being closed. Now, for example, Subaru was supposed to close from April the 10th to May the 10th. Well, guess what? They're still closed in terms of manufacturing. So a lot of those people are being idle. They just can't get the chips. And what I understand too is it's affecting people in the mobile and cell phone industry. So we're going to see that going forward. Again, as I said earlier, we have low inventory of automobiles out there for sale. So there is a spike in used car sales. And the backlog in the supply chain, there's a lot of interruptions taking place. So there's a real need, you know, for aluminum, steel, glass, etc., to build the units. And motor vehicles really represent 5.5% of industrial production. So we're seeing now that there's a groundswell in the demand, and U.S. chip spending is underway. I mentioned last month that Intel is investing between $15 and $20 billion to build 2 chip manufacturing plants in Arizona. I'm not sure when that's going to start, but of course it's going to take some time before those businesses are up and running. So I think we'll see that going forward. And again, before the pandemic, auto inventories were down by 12%. So this is just compounding where we are. And there clearly is an imbalance in raising impact on prices. You can expect the growth for both new and used cars to be back online in the months ahead. And you know, again, we're going to look at inflation as it has the impact here. And the makeup for lost production levels in chips and metal supply, it's going to take time. People I've talked to back in New York last week indicated they think that we won't get back on board to where we've been in the past till sometime in the first or second quarter of 2022. So we're going to see this linger for the time being. Typically in the summertime, a lot of the manufacturing plants will slow down and basically keep a lot of the full-time people and lay off a lot of the temporary people. But right now, when things get turned around, they're going to have to get everybody on board to catch up in the demand in the marketplace. So that's kind of where we sit in semiconductors at this point. Now let's take a look at one thing that's important, and that is the concern about inflation. So in April, inflation on consumer prices rose 4.2%, and that's the fastest since 2008. And basically, overall inflation for the entire marketplace was up 3%, the highest it's been in 25 years. So there's a real concern about that going forward. You know, what you have to look at right now is energy prices overall jumped 25% from a year earlier, now including 49% in gasoline and 37% in fuel oil. And we'll see what happens going forward. So initially, economists came out with a projection on Monday, and what it says is that they figured the first quarter was at 1.7% inflation. The second quarter is projected to be around 3.2%. As you know, we're in June right now, and you know, at the end of this month, we'll see what happens in July for the second quarter. And then, of course, the third quarter is projected to go out at 3%, and the fourth at 3.2%. But overall, they believe that by the time we get to the end of the year, everything starts to play out properly, we should really be somewhere around 3.2%. If it continues to increase over the next several months, don't be surprised if the Federal Reserve begins to start raising interest rates. So that's on the table right now. Let's take a look at trade exports. We had a good month last month. That was up about almost $12 billion to $143 billion in exports. That's good news as we move products out of the country. The trade deficit, unfortunately, is worsened. It's at $74.4 billion in the month of March. If you look back several months ago, we were running in the 50s, and now we're around 70 billion right now. And that's got to get under control. That's not good news for the economy. Retail sales last night were basically flat. We didn't see too much of an increase between March. So that stayed about the same right now. Now let's take a look at the employment picture. Here was a surprise. Payrolls came in at 266,000, and that was substantially lower than was predicated on the growth that we saw in the prior 3-4 months. So that was down a lot. And if you look, the unemployment rate increased to 6.1% in April. A lot of that was stemming from the fact that some people had temporary jobs at the beginning of the year, both in the area of retail and also in the area of tax preparation. So we're seeing some of that. Plus, a lot of people are going back now and looking for jobs. So they're back on that conveyor belt going forward. Now, there are 8 million fewer jobs since the beginning of the pandemic. If you go back several months ago, I believe we're around 22 million people were unemployed. So we're continuing to chip away at that number. The only thing I want to look at here is I mentioned business and financial services. A lot of those were people involved in tax preparations, etc. So those jobs are gone. The biggest thing we want to look at here is leisure and hospitality. That part of the economy has been a real problem for the country. That's where most of the jobs were lost. So people working in the food industry, working in restaurants, movie theaters, etc. We're starting to see those jobs coming back. So that's a good sign. And manufacturing was down about 18,000 jobs. A lot of that had to do with industry and also companies shutting down because of the manufacturing issues around semiconductors. So hopefully we'll see that turn around. Okay, next slide. Now we take a look at California. Here we had some modest gain. We had about 102,000 jobs in April. Unemployment held steady at 8.3%, still over the national average. And if you look at the 102,000, that's almost half of the jobs that were created in the United States were in California. So that speaks a lot for the California economy. Leisure and hospitality, we saw an increase of 63,000 jobs. That's good, as restaurants and other areas are opening up where these people can go back to work, hotels, etc. So that's a real critical part of our economy. And hopefully that'll continue to pick up going forward. Okay, and let's take a look at interest rates. Well, the Federal Reserve, like I said, the Board of Governors met, and they decided to hold rates flat for the time being. No changes are going to be done till possibly later in the year. However, the government announced that they'll continue to purchase Treasury securities about $80 billion a month and mortgage-backed securities at $40 billion a month. That'll remain unchanged for the time being. Mortgage interest rates basically dropped a little bit to 3%. This is an aggregate number. It was at 3.1, but I think you'll see interest rates for mortgages and things continue to escalate as we go through the year. Again, we still have a lot of low inventory in houses available in the marketplace, but rates will start to go up as we move further into the year. Manufacturing has been very strong and will continue to be. The index reached a high point last month of about 65. This month, it's down to 60.7%. A lot of this had to do with some of the weather implications around the country, but I think that we're very strong. Keep in mind, if we're over 50 basis points, means we're either in a positive mood for the economy or the economy is very strong. The last thing we want to do is what happened a few months ago where we drop below that, which signals in basically going into a recession. So manufacturing across the board is very strong. If you look at factory orders on the next slide, if you look at factory orders, we've seen here that orders continue to grow. They were up 1.1%. We've had several months of growth in the factory orders. This is really critical for the economy. So this is very good news. Small business optimism rose again. It's at 99.8. And again, it was up by 1.6. Keep in mind, the basis here is over 100. We've been over 100 in the past, and that's what we're moving in the right direction. So this is very good for business looking forward. Consumer confidence hit a high mark. It was at 121, which is great in March. You go back a few months ago, we were way below the 100 mark. So consumers are feeling better about what's going on in the economy. I mentioned, I want to talk a little bit about, let's see, productivity. If you look at productivity, for example, I'm going to come back to the existing home. One of the good things we happen is productivity is now only going to be provided for us once a quarter instead of being done on a monthly basis. Now, keep in mind, productivity was terrible for most of last year. However, it increased by 5.4% in the first quarter. And that's based upon the output increased by 8.4% and hours worked increased by 2.9%. This is the signs of companies getting back on board, moving products and hiring people. So this is very good going forward. And we should continue to see some good gains going in the right direction. And again, at some point in time, we'll kind of flatten out around 1 to 2% when we get back to more normalcy. One thing I didn't talk about is I want to talk about existing home sales. So in the month of April, they were down 2.7%. And unfortunately, this is done because we had very low inventories for homes available in the marketplace. One thing I usually talk about are company displacements. That's where companies have fairly high rates of unemployment, where they lay a lot of people off through displacements. And the good news is this is the first month in many months where there's none of significance. So in other words, nobody had major layoffs. Companies had maybe laying off 50, 60, 70 people, but nothing in the numbers we've seen in the past. So this is a very good month for people not losing their jobs. So now what I'd like to do is I want to turn to mergers and acquisitions. A lot of activity going on. First of all, I want to start with MasterCard. MasterCard is buying a digital identity firm called Ikeda for $850 million. The intent there is to bolster identification verification technology. You know what's going on with cybersecurity right now, and all the financial institutions are spending a ton of money trying to make themselves bulletproof, as you see what's taking place in the market. So you'll see this happening by Discover Card, by American Express, Visa. All of the credit card companies are spending money either through investments or through buying companies to continue to improve the safety and security of all the funds available in their marketplaces. In the retail space, there's a firm called Herman Miller. They're purchasing Knoll Furniture for $1.8 billion. Combined, that'll drive about $3.6 billion in annual revenue. The deal also creates what we call a preeminent leader in modern design and catalyzing transformation of the home and the office sectors at a time of unprecedented growth and disruption. So this is good news on their part. Verizon, as you know, you go back, I've talked about this before. A lot of times companies will make acquisitions, and Ooster and I know about this, for the wrong reasons. And here's an example where Verizon is selling off the majority of AOL and Yahoo for $5 billion. Again, they bought the companies, and whatever they intended to get out of the acquisitions, it didn't materialize. And therefore, they're taking a strategic move to start spinning off a lot of this to other investors. AT&T has decided, again, in their venture, they're getting out of the entertainment industry. So what they're doing now is they've got to deal with Warner Media and Discovery, and they're spinning it off to create a new publicly traded firm to move in that direction. So that what's going to happen, they're getting out of that business altogether. They're going to continue to focus on their core business. In the automobile industry, there's a firm called Lyft. They had a self-driving unit they just sold to Toyota Woven plant for $550 million. The idea is that it sold off its autonomous vehicle unit to Toyota, which really has the capital and investment capability to build on this technology going forward. So it basically, they spun it off because of continued high costs and the timeliness it's taking for them to develop what they thought they could get out of the investment. So therefore, they're getting out of that altogether. You look at Dell is selling Mumbai. It's restructuring its business going forward. Again, they acquired this company in 2010. So they're beginning to spin off assets that no longer fit into the long-term strategy of the company. Now, IBM just bought a company called Turbonic. And basically what it is, it uses machine learning to spot application performance issues and optimize underlying resources. So what you want to do here, it involves like containers, VMS servers, storage, networks, and other databases. So this will help IBM bring a greater service and products to the marketplace as they want to expand going forward. Now, Proofpoint is a security company that's headquartered in the Bay Area and went public some time ago. And what's happened now is their firm, it's called Thomas Bravo. It's a private equity firm. And what they're doing is they're buying the company for $12.3 billion. And the intent is to provide more working capital investment to move the company to another level to be more competitive in the marketplace. So this is a big deal, very positive outlook for Proofpoint in competition in the marketplace. So what else is taking place of significance? I mentioned earlier that copper hit a 10-year high. The copper prices were running at $4.47 a pound about 3 weeks ago, almost $9,000 a ton. And that's having a major impact. China's increasing demand continues to fill expectations of high demand for industrial metals. And that's the problem because they really corner the marketplace. Now, in the Bay Area, where Rooster's from and some of the other folks on the call are from, we lost 10 companies last year that moved out of California. And, we talked about Oracle and a few others. But since the early part of the year, we have a company called STEM Express. It's a biotechnology company located in San Jose. They're now moving to Reno, Nevada, in which they'll create 200 new jobs. And then there's a firm called Pace Certified. They're moving to Reno also. It's a financial technology firm. It's moving the headquarters really due to taxes. So there's 2 more companies that are leaving. Now, what's interesting, a study was just completed that showed that 1 in 5 electric car owners in California are switching back to gas cars. And what's happening is they're saying that it's switching back because of the inconvenience of charging. And it says it only takes a few minutes to add gasoline in your car and take off. And in many cases, it takes hours to charge the vehicle. So we'll see. I mean, that's 20%. The survey was taken over the year of 2012 to 2018, and it was a sizable amount of people that were surveyed. Keep in mind the cost of electric vehicles is substantial. It could range anywhere from 37 in some cases, but somewhere between $50,000 and $300,000, depending on what you want when you buy the vehicle. So we'll see where that industry goes. You know that California and many other states have said that at some point in time, all cars driven or all vehicles driven in California will have to be electric. So we'll see where that goes over the time frame. I believe that was in 2020, 35 was the target for that. So what's driving the rise in lumber prices? Well, again, the supply chain issues we talked earlier. 3 days ago, the price of lumber per 1,000 board feet went up to $1,645. That's up 60% over a month ago, or 374% over a year ago, which is substantial. And that's a big problem. And I think going forward, it's going to cause some real problems. And we'll see what happens. And again, keep in mind that if in terms of buying a new home, that's going to raise the new home price up as much as $36,000 was the estimate. That's pretty scary when you stop and think about it. So I think going forward, the cost of housing and building the homes across the country could go up by 36,000. You're going to have a problem. The one thing I didn't bring up a moment ago is I wanted to talk about the new home sales. So for those of you in California, you'll appreciate this if you just sold your home. So listen to this. In Southern California, the prices rose by 20.2% in April. 20.2% in April. This is further evidence of a hot marketplace. So let's take a look at the 3 of the distinct areas. So in Los Angeles, the median price rose by 19% to a midpoint of $750,000. Sales were up 101%. In Orange County, the median price rose by 15.6% to $872,000, while sales increased 97.9%. And in San Diego County, where I am, the median price went up to 17.8% to $700,000, while sales were up by 74%. We have not seen numbers like that, to my knowledge, ever. That just shows you what's going on with the tight market for fewer products on the marketplace, but sales are going. Sometimes some of the deals, I think Kathy will tell you, deals could close within 24 to 48 hours, depending on the demand for the product. And you've got multiple people trying to get the same product. So the other thing I wanted to mention is that JCPenney basically has indicated that they just got a round of $1.2 billion in cash to help them as they came out of bankruptcy. And I think that the good news is that they want to reinvent the company, and we'll see what happens going forward. So we'll see about Penny's. Hopefully they'll be in better shape once they can turn things around. And then Ford is taking steps basically to make their own cell batteries. And they're going to invest about $180 million to try to build their own products. So I think this is a good move going forward. So with that in mind, what I'd like to do is open up for questions and answers.
Yeah, Dennis, you talked about the number of companies leaving California. Are there any indications that there are any companies that are moving to California, or are there any industries that are expanding significantly in California?
Well, I think what you're going to see expanding in California, I think we're going to see more biotech expanding, because a lot of the drug manufacturing is being brought back into the country to be built and developed here, which I think is critical. We have to do that. And I think if you look at what happened with the pandemic, it's clear why. So I think you're going to see growth in that area, and also in the manufacturing as it relates to products that they need for supporting that industry. The problem you're going to see, what I've heard, and again, this is just rumors, that once some of the firms such as Oracle and Tesla and the others get set up where they're moving to in Texas, don't be surprised if some of the business units in California are moved to Texas. Now, I know for a fact that Tesla had put in a request to expand the factory where they manufacture their vehicles. I believe it's in Fremont for about, I think it was between 40 and 60,000 incremental square feet. And if they don't approve that, then there's a high probability that Tesla will move their manufacturing to Houston, Texas, where they bought a lot of land. So I think going forward, you know, the real key we have here is the concern is affordable housing. And if you want to hire people and they can't afford to work here, that's a problem. So I think that's not going to change. So I think we're going to continue to see that happen. Now, in the last month, I saw a document that said that, you know, we lost one Senate seat, I think it was, in the House of Representatives, okay? So what we saw was a loss of over 180,000 jobs last year from California. This has nothing to do with the 50,000 people that passed away. This is 180,000 people that literally left California. Now, people are coming in, but a lot of people are leaving. My colleague Henry Weiss is here. On the 30th, Henry moved and he's now in Carson City, Nevada. You know, so I mean, you're going to see more of that taking place. So it's up in the air about industry. My concern is if they can't get it right with taxation and affordable housing, they're going to lose more industry in California, without a doubt.
Okay.
Questions? Morning,
Yes,
Urban.
Dennis.
Yep.
Tim Farron.
Yes, Tim.
I would like your opinion if we can get Governor Newsom out of here. Would that change the business environment favorably?
Well, I'll tell you what, as I've told people before, we're not going to go into politics, but I can tell you right now, whoever's running the state of California is going to have to focus on getting people back to work and cutting taxes and making it more affordable for people to live here. And whoever's going to be the governor, whether he stays in office or not, those are some fundamental things that need to be addressed in the state of California. We've got a serious problem. And, you know, people graduate from, whether it be Long Beach State or Stanford or other places, people want to go to work. Well, where are you going to work if you don't have a job? That's a problem. And, you know, a lot of the people that were laid off in industry, such as, let's look at leisure and hospitality. A lot of these people are going to have a very difficult time getting a job because, one, they just have a high school education, perhaps. And number two, they don't have an abundance of skills. So somehow they're going to get retrained, or they're going to have to go back to school and get a job. But these people are going to be unemployed for indefinitely. That's a problem we have to deal with.
Agreed. And then here's a caveat. I don't want to get political, but what if this current administration in the White House raises taxes? What's that going to do to inflation?
Well, let me tell you something. The debt is astronomical right now, and at some point in time, taxes are going to go up. The question is how much is it going to go up by, and what are they going to decide to do? I mean, like I said last month, capital gains is going to be raised. What, we don't know yet. Income taxes, all these things are going to go up at some point in time, but they're going to have to agree on something that's affordable. That's just a matter of time until that happens. And inflation is going to continue to go up until we can get the supply chain back on track, as I believe, and oil prices and things of that nature. We're going to continue to see inflation because, again, it's a demand for product. And that's what you're seeing happening right now. You look at the housing market where Kathy is. I mean, I mean, if you have a good base of business and everything else, you don't have a lot of inventory, and hopefully inventory will come online right now. But I mean, it's a seller's market. It's incredible.
Well,
you know,
if they raise interest rates, that's going to kill the housing market.
Maybe, maybe not. We'll see. Next question.
Hey, Dennis, this is Jim.
Yeah, Jim.
I'm looking at the electric car issue with Ford, Tesla, and GM, and I see that Ford stock is going astronomically high from what I purchased it at $5 or $6. It's now at 14. But I don't see GM stock going up that way, and I don't see Tesla going up that way, even though GM's going to take and go to electric automobiles in mass. Can you help me out there?
Well, again, it depends on
Why
the
is
product.
Ford, why is Ford stock moving so quickly and GM is not moving at all?
Well, I'll tell you what, I don't get involved in the stock market, but you need to look at the core business lines that each of these programs have. General Motors has eliminated more vehicles than Ford in their inventory going forward. They're cutting back substantially to focus and redirect what they want to do. Ford is already ahead of that game as well. And Ford is coming up right now with some vehicles in the electric marketplace for trucks. And it's going to be a major breakthrough. They're also working on some battery technology that when that comes on board, that's going to really improve the amount of time it's going to take and lower the time it takes to charge batteries. So Ford is moving forward. They're also investing a lot more money than General Motors into building electric vehicles going forward. So really, it depends on how you position the company. And you know, like I said, Ford seems to be quicker on moving than General Motors.
Okay, thank you.
Christopher. Any other questions we have?
Dennis,
Mr.
this is Jim again. If you're going to talk about that, then talk about inflation. If it continues to go up at 4.4% per month, what's the Fed's going to do to help to relieve that?
Well, like I said earlier, they're going to wait and see what happens. There's two factors for raising interest rates. One is called employment, and one is called basically what's going on with inflation. So you're going to have to wait and see what happens here. And I think if we go forward, let's say we're in August or September, if things continue to worsen, they're going to have to dig down into their chest and they're going to have to take some action. And that action will be where I believe they'll start raising interest rates. That's what's happened in the past. And it'll happen again. But again, it depends on what happens. Keep in mind, oil prices and the supply chains right now I believe, are driving most of the problems we have right now. If you go to certain places and you can't find a product or it's minimal, you're going to pay a lot more money for that particular product. If, for example, if you use fabrics, there's a company called Joann's. People have bought products there for a long time, to make things. And some of the prices on some of the items that they have gone up at triple prices because they can't get the inventory. And what they're going to do is they're going to get as much as they can while they have that. Go online to Amazon or some of the other companies out there and try to buy something. You're going to find out where it's backlogged. There's a backlog of inventory. So I think that's the real key right now. So the real key is the supply chain and oil. That's what I think the two drivers are right now.
Hey, Dennis, Tom
Yes,
Crotty.
Tom.
Hey,
Morning, Tom.
have you given any thought to the impact of the drought on the West and the water issues? I understand San Diego has done a great job on water. They said they can survive 5 years of a drought, but I'm not sure the rest of the state has that ability. So I'm just curious if you've given that any thought, Dennis.
Yeah, one of the things they've talked about is infrastructure spending. For those of us that have lived in California for a long time, like forever, the problem is every time we've had rain and everything, we have not built the appropriate land situations to accommodate and retain the water. So for example, if you lived in LA, it rained, all the water went into the ocean. It went into Playa del Rey. And the problem is they haven't been able to keep the water. Secondarily, we've talked about water resalinization projects for decades. I mean, they built one in El Segundo. We have one in Carlsbad. And to me, if they could focus on building more of those, like in the middle part of the state, for example, in Fresno, they could use a lot of that type of water to use that for agriculture. Right now, for those in the Bay Area where you are, Tom, you've got a serious problem. And that is that I've been told that by September or August, the Northern California may have to go on water rationing. It's a serious problem. And they're also looking at ways of bringing trucking water products into California from other places, such as maybe Alaska, et cetera. So they've got a serious problem. We're okay right now here for the next 2 or 3 years, but it's a serious problem. And, whether you want to blame it on global warming or not, it's irrelevant. The point is, a couple of years ago, we had tremendous amount of rain, more rain than we'd had in a long time. Now, all of a sudden, it's not raining. Normally, we've had rain in November and December, hardly had any rain in November and December. We've had a couple of days in May where we had rain. It usually doesn't rain here in May. So there's a problem up there, but they didn't want to spend the money on salinization plants or, to do that. And I think that's been a mistake for years. Huntington Beach, for example, indicated last year that they've been fighting to do this for decades, and they've been blocked. Every time they try to do this, it's been blocked. It's very costly to develop those types of plants, but I believe that those types of plants could be really utilized especially in the middle part of California where there's agriculture. That's going to really hurt the agriculture business, and prices are going to go through the ceiling. Just a question of when. So we've got a problem, a serious problem with water. Mr. Carr?
Hi, Dennis. I'm a little overwhelmed with all the information, and mostly because of the implications of that information that you put out today. There's a lot of things going on, and I know that you don't want to put politics in there, and I'm not going to bring in specific personalities or anything like that.
Sure.
But the government has a huge effect upon, how the economy works through its laws and its regulations and so forth. Recently, the president approved a pipeline going from Russia to Germany, but shortly after he was in office, he decided not to continue to build the Keystone XL pipeline. He's also just recently said that America will not mine any precious metals. He's going to leave that job up to the Chinese. And there's a lot of other things that are going on in the world where it seems that America is basically withdrawing a little bit from its normal position of being in the lead on a lot of these things. And it just seems to me that we're kind of the country itself is retrenching. And the effect of that is these rising prices with lumber. We import lumber from various foreign countries, but we don't cut any of our own. And therefore, the price obviously goes up. And it just seems that we're just taking more and more steps towards restricting American economic progress and allowing other nations to supply us with their products and stuff like that. And I think that's probably not a very good idea in the long run to do, because right now we're in this chip shortage, and we don't have any chip factories in the country anymore, or very few of them, as evidenced by the one company that you cited building a couple factories in Arizona here. But that's not going to come online for another 2 or 3 years while they build those factories. And it just seems to me that we're just kind of stepping back from where we should be in the forefront and allowing others to take that lead from us. Anyway,
No, I agree. I tell you what, I think I agree with you. I think the problem is if you go back and you look at companies, and Usher's well aware of this, you look at companies like GE and IBM and et cetera, over the past several years, they've sold off a lot of those assets outside the country. Okay? Appliances, laptops, et cetera, have been sold off outside the country. And when something happens, for example, now you're looking at precious metals and we have to rely on China, that's a problem, because then the country is over a barrel. What happens is if you mortgage all these assets, you move everything off the country, outside the country, and something happens, we don't have any leverage. And my concern is it's going to have a major negative impact on us. We need to be more self-contained. I think the oil pipeline should stay in place for the time being, because until we shift over to other kinds of technologies, the state of California announced Monday, they're looking now, it's going to take time. They want to build offshore windmill technology, say 25 to 50 miles off the coast. And they want to use that. They believe they can do a lot of stuff to provide electricity to a lot of the homes in California. Well, that's a long-term project. So I realize that we're in the process of trying to get away from using oil and gas. But I think in the meantime, you've got to have a plan. You just can't cut everything off. You got to remember something. Germany basically gets all of their oil from Russia. That's been that way for a long time. And that's not going to change. But I think with the technology, you heard what happened with Exxon is being forced into moving more away from oil products into other things. So that's going to take a long, long time, maybe 25 years, who knows. But I think the biggest concern is when you lose control over product that you want to have, like oil, gold, copper, aluminum, that's going to drive our prices up substantially. And we won't have a lot of leverage. And I disagree with that. So we'll have to wait and see what happens. And again, keep in mind, whether it's Abraham Lincoln or whether it's Joe Biden, et cetera, these people can say what they want. But again, you've got a House of Representatives and you've got a Senate, and everything is just not carte blanche. So we'll have to wait and see what happens, because I think all of the issues are going to have to come out on the table, the pros and cons about what they want to do and what the ramifications are. If you can imagine, what if you raise capital gains to 40% and Bill Holland sells his home, and all of a sudden you're going to have to pay 40% on capital gains on the sale of your house or something like that? I'm just saying, the implications are just unbelievable. So I think we're going to have to wait and see, what happens, with the Senate and the House based on what goes on. A lot of the concerns you have right now, I think, are going to be coming up. We have a midterm election next year. You realize that?
Oh,
So
yeah.
we'll see what happens. But there's a lot of concerns. There's a lot of, sword waving, whatever you want to call it. But I think right now you're going to have to wait to see when some of these come up. Right now there's a lot of talk, but I haven't seen anything coming up for a vote. And when it gets to a point where there's going to be a vote, then you're going to see the pressure and see what the ramifications are if you decide to go left or go right. That'll be the key for us.
Yeah, Dennis, before you close, can you talk
Yeah.
a little bit about the trends of international company buying U.S. assets? Is that going to continue?
I think that will be continued if they want to buy things. I mean, there's companies like Broadcom. You remember they've tried twice to buy Qualcomm, and that was negated. But I think you're going to see more companies trying to come in here and buy American companies, because this is the best place to invest your money. I don't see that changing. And it won't necessarily be companies from China. You've got a lot of companies from Europe. I mean, Switzerland, other countries are looking to buy assets in the United States, and that's going to continue. So I don't see that changing. I think right now there's a little bit of a lull because of where we are with the pandemic. But I don't think that's going to change, Bill.
Okay.
There seems to be some alliances too, Dennis, U.S.-Japan alliance. You care to comment on the Japan pouring cash into domestic chip making? Nikkei, I think this is the name of the company, but they're going to be producing advanced semiconductors and batteries under the year's growth blueprint.
Well, I'm not too familiar with what they're doing, but I can tell you what Japan is looking to do right now is they're looking more strategic, and they've always been strategic. They're looking more strategic in terms of investing in areas where there's a tremendous demand. And as you know, we're moving more towards more technology. We're moving more towards the battery technology. I heard yesterday, and again, there's a small company that's working on a battery, and they're talking about, if this thing works, you'll be able to drive your vehicle from California to New York and back before you have to charge it. Now that's a goal again. So you're seeing a lot of money moving in those directions. Again, it depends on where they see growth. Okay, and that's the key. You don't hear them talking about retail, because retail is going in a different direction. So technology will always be booming. And I think the question is, if you want to play in the game, you're going to have to invest. And I see the Japanese doing it. Japanese have been real quiet for a long time. They haven't said much.
Yeah.
We've got a few more minutes if anybody has a final question.
Kathy, do you want to comment on real estate in Orange County? I guess Kathy's not there. Okay, anybody else have any other questions? Well, I'm looking forward to our June program. It's going to be very interesting. We'll have a lot of information. Again, as we move into June, keep in mind that's the last month of the second quarter, and that should be very interesting to see what takes place. And again, the Federal Reserve will be meeting sometime in June, and we may see something take place depending on what the inflation numbers are that are coming out for the first quarter and also for the month of May. So we'll get some indications on what's taking place there. And I'll talk a little bit about anybody familiar with a company called Amazon. I'll talk about that. They just bought MGM for $8.5 billion, excuse me. And what the plan is to get into the entertainment business. So you're going to see, Amazon continues to do things. They've opened up a couple of supermarkets back east. They're in the process of opening up or buying pharmaceutical companies so they can be involved in the drug business. So, I mean, they're going to continue to expand everything they can as much as they can. So I think they're, you know, just keep your eye on Amazon and what they're doing on a daily basis.
Always interesting, Dennis. Thank you.
Okay, everybody. Thanks a lot for joining us today. Anybody
you.
have any questions before we call it a day? Thank you, everybody,
Thanks,
for joining
everybody.
us. We'll look forward to seeing everybody next month.
Bye.
I'll call you, Dennis.
Okay, Bill.
All right.
Good luck, Dan.